Okay, think about anything with moving parts. Could be your car engine, right? Or something huge like giant industrial machines. Now, what if you could really know, when something was about to go wrong before it actually broke down? Imagine like a health monitor, but for machines. Well, that technology exists, and it's exactly what we're diving into today. Welcome to the deep dive. We're focusing on the machine monitoring vibration analyzer market. Now, these aren't just simple gadgets. They're pretty sophisticated devices that basically listen to a machine's heartbeat, its vibrations. By analyzing these tiny, often imperceptible shakes and rattles, they can spot the smallest issues way before they become big problems. And this allows for something really transformative across industries. Predictive maintenance. It's a total game changer. We're moving away from fixing things after they break, which is expensive, towards smart, proactive upkeep. So our mission today, to really sift through the data, pull out the key insights, maybe some surprising facts about where this market is actually going.
We've got a detailed forecast report here from Cognitive Market Research, and it looks all the way out to 2033. And the headline numbers, they tell a pretty powerful story right off the bat. Back in 2021, the global market valued at $334.755 million. Fast forward to 2033, and it's projected to hit $598.088 million. That's growing at a global compound annual growth rate, a CAGR of 4.955%. Okay, let's unpack this, because that kind of steady growth, especially in such a specific tech area, well, it says a lot about the future of industry, doesn't it?
It really does. And what's fascinating, like you said, is that consistency. It's not some speculative bubble. The report shows this clear, steady climb. You mentioned the $334 million in 2021. It's expected to reach $406.2 million by 2025, and then push on to that nearly $600 million mark by 2033, keeping that solid 4.955% growth rate the whole way. And if you connect that to the bigger picture, well, this sustained growth, almost doubling, it signals a really significant shift. It's like industries globally are realizing, hey, predicting failures saves us way more than just reacting to them. It's not just about avoiding downtime, though that's huge. It's also about, boosting overall efficiency, making expensive equipment last longer, and even improving safety, right? In places where machine failure could be, well, catastrophic. It's a strategic bet on reliability.
That makes total sense. It's like instead of your car breaking down the side of the road, you get a warning light or maybe even a notification saying, that weird noise. Yeah, you've got maybe 3 weeks before something serious happens. Get it checked. It's revolutionary stuff. So let's zoom in a bit. Where is this growth happening? Let's start with North America. The market there had pretty solid foundations, $116.16 million back in 2021, projected to grow to $196.173 million by 2033. That's a CAGR of 4.465%. And the US, as you'd probably guess, is the biggest piece of that pie, forecasted to hit over $159 million by 2033. But here's where it gets really interesting for me. Canada. Smaller market overall, obviously, but look at the growth rate. Canada's boasting the highest TAGR in North America, 5.198%. It's projected to go from just over $12 million to over $22 million. I mean, Canada leading the growth charge in North America would have thought. What do you think is driving that specific push up north?
Yeah, that's a really sharp observation. Canada's rate definitely jumps out. It suggests some specific factors are at play there, outpacing the US growth rate. Often you see this kind of accelerated adoption in economies with a heavy reliance on, say, resource extraction. Think mining, oil and gas, forestry, places where machinery runs hard, often in tough conditions. Any downtime there is incredibly expensive. So investing heavily in predictive tech like vibration analysis, it becomes crucial. It's about ensuring that continuous operation, protecting those huge capital investments. And Mexico's showing strong growth too, by the way. Over $14.6 million by 2033 with a 4.6% CAGR. So a similar push for efficiency happening there as well.
Right, that context helps explain Canada's surprising lead. Resource industries make sense. Okay, so from North America's sort of foundational growth, let's hop over to Europe. Europe seems to present a more varied picture, maybe, different speeds of adoption. The overall market was $76.659 million in 2021, projected to hit nearly $130 million by 2033. That's a regional CAGR of 4.539%. But within Europe, Germany, the industrial powerhouse, seems to be leading the way in growth rate. Highest KGR there at 5.274%, almost doubling its market to over $26 million by 2033.
Exactly. And that range you mentioned is what's really interesting in Europe. You've got Germany, the UK, France, Italy, Spain, all showing pretty solid growth, in that 4 or 5% AGR range. which makes sense given their strong industrial bases. But then you look at the other end, Russia stands out. Its CGR is the lowest in the region, just 2.674%. Now, that suggests, well, maybe different levels of market maturity, or perhaps different investment climates are impacting things. A lower CGR could mean the market's already quite established, the big initial adoption wave has passed, or maybe slower economic factors are at play. It's definitely a patchwork.
That distinction is important. Not all growth is the same. And speaking of growth, let's talk about Asia Pacific. Because, wow, this region looks like the absolute global growth engine for this market. Highest regional CAGR worldwide, a stunning 5.839%, the market value there. Projected to lead from about $86 million in 2021 to over $170 million by 2033. That's almost doubling in, 12 years? And it makes APAC the largest regional market by the end of this forecast. Now, China, maybe not surprisingly, leads in share market size, growing from $26 million to over $52 million. That's a 6.034% CAGR. But what really jumps out, I think, is India, an even more impressive surge. India's AGR is exceptionally high at 6.679%, rocketing from around $12 million to over $26 million. And then get this, Southeast Asia has an even higher CGR, 6.682%. That makes it the single fastest growing area in the entire report, country or subregion. It's going from just over $4 million to over $9.4 million. So what's going on there? What makes Asia Pacific, especially India and Southeast Asia, so hungry for this tech?
Yeah, that's the multi-million-dollar question, isn't it? And it really seems to be a mix of things. First, you've got just rapid industrialization across APAC. Often they're building new infrastructure, new factories, basically from scratch. That means they can integrate advanced tech like this right from the start, kind of leapfrogging older methods. Then you have countries like India and many in Southeast Asia seeing huge investments pouring into manufacturing, into energy sectors. Economies are growing, populations are growing. And in these brand new large-scale facilities, downtime is just cripplingly expensive. So predictive maintenance, it stops being a nice to have and becomes, well, essential. Plus, you've got government initiatives pushing things like smart factories, Industry 4.0 adoption. That's accelerating the trend too. It's really a perfect storm for this technology.
That paints a really clear picture. It's not just growth. It's like a foundational shift happening as they build out. Okay, let's quickly touch on the other regions. South America. Market there was around $22 million in 2021, heading towards $41 million by 2033. That's a promising 5.231% CAGR. And Argentina stands out there, right?
Yeah.
Highest growth in South America.
That's right. Argentina leads with a 5.865% CAGR, almost doubling its market to over $6.4 million. Brazil is also a big contributor, growing at over 5% CAGR as well. And again, South America's growth, especially Argentina's, kind of echoes what we talked about with Canada, economies with significant mining, agriculture, energy sectors. Heavy machinery is vital, so they invest in tech like vibration analysis to keep things running smoothly. It's about modernizing that industrial base.
Makes sense. Okay, Middle East.
Middle East also showing strong potential. It was about $17.4 million in 2021, projected to reach almost $32 million by 2033. That's a 5.134% CAGR. And the UAE really stands out there. Highest CDR in the region, 5.736%. It's set to nearly double its market to over $6 million.
Given the UAE's big push to diversify its economy, invest in infrastructure, advanced manufacturing, that leading growth rate isn't totally surprising, is it? They're often quick adopters.
Exactly. Places like the UAE, Saudi Arabia, Turkey, they're making huge investments beyond just oil and gas. They're building smart cities, logistics hubs, new manufacturing plants. And all that new complex infrastructure naturally needs advanced maintenance tech to keep it reliable and efficient.
Right. And finally, Africa.
Africa's market recorded just over $16 million in 2021. It's projected to reach about $29 million by 2033. That's a solid CGR of 4.651%. Within Africa, South Africa leads the growth. Highest CGR there at 5.317%, looking to grow from about $5.6 million to nearly $11 million.
That's quite impressive for South Africa, probably linked to its mining and manufacturing sectors, I imagine. Okay, so we've toured the globe here. Let's pull back. What's the big takeaway? What's the overarching story for you listening?
I think the main story is definitely one of robust, consistent global growth for these machine monitoring vibration analyzers. We're looking at a market basically set to almost double in value over the next 10 years or so. And while every region is growing, it's really Asia Pacific, particularly places like India and those fast-growing Southeast Asian economies that's leading the charge. They're driving this expansion because they're either building new industrial capacity or aggressively modernizing what they have. They get it. Predictive maintenance isn't a luxury anymore. It's fundamental for staying competitive, for being efficient, which, raises that important question. What does this widespread adoption really tell us about where industry is heading globally?
Exactly. When you step back and look at all these numbers together, what stands out isn't just the amount of growth. It's the the strategic importance that's clearly being placed on keeping machines healthy. It really underscores that even in these very specific, maybe seemingly niche markets, there's incredible momentum. And a lot of regional variation too, driven by different industrial needs and investment priorities. So as we wrap up this deep dive, it's crystal clear. The machine monitoring vibration analyzer market isn't just growing, it's absolutely thriving. We're seeing nearly a doubling in value projected between 2021 and 2033. And the Asia-Pacific region, particularly India and Southeast Asia, is undeniably the powerhouse leading this global expansion. It shows this rapid strategic embrace of predictive maintenance, all driven by industrial growth and the relentless need for efficiency. So we'll leave you with this thought to maybe chew on. What does this steady worldwide growth in machine monitoring really tell us about the future? The future industrial efficiency, of preventative maintenance, and just the overall lifespan of critical equipment everywhere.
How might this quiet but pretty powerful trend actually shape the factories, the power plants, the infrastructure of tomorrow, making them not just more efficient, but maybe fundamentally more resilient, more sustainable?